Hey, good afternoon, everyone. Brian Hoops, Midwest Market Solutions. This is our Market Insider TV WASDE report. It is Thursday. It's October the 10th. Crop report out today, and we hope it went in your favor. Most people were disappointed with what they had to say at the USDA office today. We're going to talk about that. And talk about the report here. This is serving in place of our closing TV commentation. And I want to mention that tomorrow morning I'll be on TD Ameritrade Network. You can go to their website, tdameritradenetwork.com, and watch my live interview. It'll be at 7:15 a.m. Central Time, talking about this report and what it all had to say. I was on RFD TV this morning and sent that link out. It's on our website if you missed it. It is on our website. You can watch it talking about the report and the reaction to it. That came out right after the report's release, about 45 minutes after the report was issued. So got a couple media appearances there. And looking at some other ones here coming up in the future. So I hope you have a chance to check those out. Let's take a look at what went on in the report today. Remember, if you have any questions, reach out to any of our offices. I know any of them would be glad to assist you. You can find information about all of our offices. They're listed right there and available on our website, which is MidwestMarketSolutions.com. You can watch our daily market minute as well. Sign up for our Market Insider TV service and our daily newsletters. A lot of our services that are available, and just need to sign up using email, and we'll get you on the right path for what information you need. We do have full discount brokerage services, different market quotes and trading platforms, our hedge program, and of course the daily newsletters, our trade newsletter, which comes out 3 times a week, set to issue a new issue tonight. Our weekly newsletter, as mentioned, our audio video commentary series, Twitter feed, and our exclusive text marketing service. So here's a look at what the USDA presented us today. The left-hand column here, if you look right in this area here, production above expectations for corn. Let's look at corn first. Yield, not much of a change from last month, 168.4, virtually unchanged. But you look at compared to the average trade gas, that's a bearish number. The trade really missed this, as we were expecting yield to come down. That's what it did from the August to the September report, and that did not happen at this point in time. So production, just a very small increase, and harvested acres were down slightly. We'll talk more about that here in a second. Our total production is 13.779 billion bushels, and that's only 20 million less than last month. So not much of a change there. Here's harvested acres. All this numbers here are right on your screen. It's down from last year. Yields are down. Harvested acres virtually the same. But it was what the market was caught off guard was that yields did not fall further like the trade had expected. Now, the trade was right on the soybeans. We're one of the analysts at Bloomberg surveys, and we'll talk about where our estimates were compared to USDA. But trade was almost nailed the soybean production number, 3.550 billion bushels, and the yield was not far off either. Trade was 47.1, and USDA dropped it a full bushel per acre from last month. So a lot of people are going to question, how can corn yields go up, soybean yields go down during the same growing season? And that is pretty unusual. I think the USDA just did not have much in the way of any harvest data. Harvest is way behind schedule. They don't have a whole lot of harvest data. I didn't expect they would make major changes in this report, but I didn't expect we'd see an increase in corn either. Harvested acres down slightly from last month, way down from last year. This column on the right, way down from last year. That's going to change by next year. But overall production is down significantly from a year ago, and that helps us in our ending stocks, and we'll talk more about that here in a second. Let's take a look at our ending stocks numbers, and we'll go through commodity by commodity. But U.S. grain ending stocks, this is where the surprise really hit the market hard, and why we were down 14 cents in corn. Ending stocks at 1.929 billion bushels, way above, the average trade gas. Now, it is down from last month, and it's down from last year. But compared to the trade gas, it's a bearish surprise, and that's why we're down 14. Now, soybeans had at one time 10-cent gains during the trading session. However, with lower corn and lower wheat, both of those double-digit losses, and pretty hard for soybeans to act independent. Ending stocks at 460. That's a sharp reduction from last year. It's also down from last month, a sharp amount. You remember just this last spring, we were looking at 1.1 billion bushel carryout of soybeans as a possibility. So compared to that, we've cut this in half, and the market did its job as far as limiting the production and our ending stock. So this is more manageable. It's not bullish, but it is more manageable. Wheat, we'll talk more about this here in a second. Ending stocks 1.043 billion bushels above the trade gas, above last month, and nothing exciting in the wheat. On a world perspective, corn stocks compared to last month is down, way above the average trade gas. Soybean stocks below the trade gas, below last month, and wheat pretty much in line with last month, last estimates, and the average trade gas just a little bit bearish tone here for the wheat. So not a lot to talk about in the wheat. We'll kind of gloss over that because the small grains report had the wheat production and the quarterly stocks, and that was the big report for wheat. Okay, let's look at corn and the balance sheets here. We talked about some of these changes production-wise, smaller harvested acres, smaller planted acres, just a very small tick in yield, and production down slightly as a result. The big change coming into today was we knew beginning stocks would be down significantly because of the quarterly stocks numbers. They were down 331 million bushels. That's a positive. So overall, our supply was 350 million bushels less than last month. Of overall supply number, that's positive, going in the right direction. But when you look at demand, that's where we really faltered in here. And that's the problem going forward, is rallies such as what we've seen over the last several weeks are going to be hard to be maintained here. Total export commitments for corn, they're running 52% below last year at this time. This is the lowest corn exports in the last 32 years. So USDA is saying 1.9 billion bushels of exports. We are off to a terrible start at this point. A year ago, we were over 2 billion bushels as far as our exports. I don't see how we're going to hit that this year the way we're currently going. Current sales on the books are 21% of the export projection of 1.9, and USDA lowered these exports by 150 million in this report. The other major change is ethanol usage, down 50 million. Now, I thought going into this report, they may leave ethanol demand alone, depending upon how the USDA perceives what President Trump's, I'd say this in quotations, massive energy package aimed at increasing demand for ethanol. I thought maybe they'd just leave things alone, but they did trim it by 50 million bushels. So bottom line here is ending stocks were decreased, but all of that was because of this carry-in number, and that was already factored into prices. So not a terrible report, constructive from a small standpoint, but really you can't say it's bullish, and the market reaction was certainly bearish. Here's what the USDA said in this column, what they said today. This is what our expectations were. This is what I think the yield is going to be. I think we're going to drop yield even further, and this weather that's going on in the Nebraska, north of South Dakota, Minnesota, Idaho, Montana, corn yields I think are going to drop. A lot of this corn that was not mature, black layered, is going to be, pretty much it's going to come to an end. We're going to see an end of that growing season, and we're not going to reach full maturity. So I think the numbers will come down, but it's probably going to take until January before that happens. Here's our exports. I think we could see a little rebound in exports. Overall, I don't look for much. I think they're pretty much in line. Maybe I'm optimistic at this point. Ethanol usage, I think we kind of we've talked about that. It's going to be pretty stagnant, but maybe the President Trump's package will bump us up to 5.5. Anyway, I see ending stocks tightening up a little bit from our current levels, maybe a 1.75, 1.74 billion bushel area. I just don't think there's much in the way to get this number much higher. I think we're stuck at this area, and unfortunately, this is not a bullish number. We got to sell rallies in this corn market. Let's look at soybeans here. We knew soybean stocks, the beginning stocks, were going to be declining by about 92 million bushels. That's exactly what the USDA said. 92 million bushel reduction based on the quarterly stocks numbers. They didn't make too many changes here. Planted acres down a little bit, harvested acres down, yields down 1 bushel per acre. I think that's certainly justified, and we may see that trimmed even more. One area I don't agree with is their export number at 1.775. Our export commitments are about 20% below last year's levels at this time. It's the lowest in 11 years for late September, so it's not a great number. They left exports at 1.775 billion bushels. This is the lowest since 2012 and 13, when we exported 1.328 billion bushels of soybeans. So this is a disappointing number. I think it could jump a little bit. If we get China back into the market, we're going to see exports improve quite a bit. And I'll talk more about that here in a second. But well, let's just talk about it now. China's made an offer to purchase 10 million tons of soybeans this week. That's a token, as it only gets them back to the pre-tariff levels. China could purchase between 10 and 12 million metric tons this year with the current tariffs in place, unless we get an agreement is made. If you add that 10 or 12, let's say 12, and you added the 10 that they're offering to purchase, that takes them back to 22 million tons. Well, in 2016-17, they bought 22.7. In 15-16, they bought 20.3. In 17-18, they bought 16.5. So it gets them back to normal levels. It's not anything that they're increasing above and beyond what they normally would do. So it's a token purchase and not seen as bullish by the trade. Overall, ending stocks drop 180 million bushels. Bullish, in my opinion. Prices move up. I don't think soybean values will stay down for too long, but could certainly be wrong on that. I thought yield, almost exactly what the USDA said. I thought we'd have a little bit more planted acres, but bottom line production coming in right in line with what the USDA says. I think the exports are going to be improved a little bit. Crush, pretty much the exact same here as what the USDA says, but I've got balance sheets tightening up just a little bit. Maybe closer to 400, 415 than what the USDA is, because I think exports are going to improve just a little bit. Now, there was some news out of CONAB, the Brazilian agency, today. They expect a bigger Brazilian soybean crop at this time than last year. If that's the case, that will cut into our exports. If they have a good crop, that's certainly going to weigh on our export activity, but I have a feeling China's going to be in trying to make a deal with the United States. And that's why I have a little bit more positive export forecast than what the USDA has. Let's look at wheat. We won't spend a lot of time on wheat because there isn't that much here to talk about. No yield changes. Beginning stocks carry in by 8 million bushels. What they did is they lowered exports by 25 million bushels. Remember last month they raised exports by 25 million. Now they lowered them by 25 million. So we're right back to that 450. And that pretty much goes and accounts for the increase in ending stocks. They're up 29 million bushels from the prior month. I want to flip to this next screen here and look at our this line down here, carry out. This is my spreadsheet. You go back here, and I have charts that go back. For much longer than this, but on the screen, you see this here, 1, 2, 3, 4 years in a row, our ending stocks are projected to be over 1 billion bushels. Well, we've never, up until this year, 16-17, we never had ending stocks over 1 billion bushels. This looks like the 4th year in a row we're going to have ending stocks above 1 billion. There isn't really anything to say that we're going to change this. I don't think exports are going to improve all that much. Certainly, if we get supply rallies in some country, some country gets hot and dry. We had a supply rally in spring wheat country here recently. Those are selling opportunities. There's nothing bullish on the horizon for this wheat market. We'll probably go into the winter and plant less wheat acres because the prices are dismal. And that, if we have something like that that gives you a rally, go ahead and make some sales, because this market, there's nothing bullish here on the horizon. We've just have too much ending stocks, and we're not going to clear this up anytime soon. So overall, wheat was down today. Obviously, corn down as well. Soybeans, if you want to be something bullish fundamentally, based on this report, what we're seeing, it's the soybean market. All right, that's what I have for you. I hope this helps you, and I hope you have a great night. I hope you tune in to RFD TV, TD Ameritrade Network, and catch my appearances there. Have a good night, everyone. We'll talk to you again soon.